Oh man, this is an emergency Bitcoin update. Bitcoin and markets are responding. Does this now mean that we are away from some of these geopolitical fears which we've seen over the last 2 to 3 days? I need to break down exactly what this chart pattern is you're looking at. Is it bullish? Is it bearish? Where am I looking to get back into this market? And a lot more. If you appreciate these updates, smash the likes. Do not forget to subscribe. If you actively want to trade with me, you can join my VIP trading community for absolutely free by signing up to WEEX. Links in the description. Deposit $100. Send me your UID to my Telegram channel, okay? You're going to find me on Telegram, and I'm going to give you free access to my VIP trading community where you see my exact trades day to day. Definitely take advantage of this opportunity. Use the link in the description below. Nice, big, strong daily candle here on Bitcoin. What's more important is what it represents. First and foremost, let's remind ourselves that we've had potentially World War III type of, stuff going on over the last 48 hours, and yet Bitcoin remained really steadfast. I mean, surprising to see that on the Friday itself, Bitcoin, of course, fell down to 102, but then very quickly recovered back to 106 before the end of the day. Huge resilience, huge strength from Bitcoin, showing the bullish nature of how Bitcoin can react as a defensive asset. In times of need, people are happy to get into Bitcoin. But what's more important, after consolidating for a couple of days, we're responding. We're bouncing from our daily EMA ribbon, and this is a good sign. But, does this now mean we're out of the woods? Can we now start to see 110, 115 and start heading upwards like many people are expecting? That's what we need to break down. First and foremost, are we going to get a rate cut, right? This is a big theme which we need to talk about. Currently, the market's saying no. They're saying no bueno. June the 18th, right, is the next FOMC meeting in 2 days' time. Are we going to get a rate cut? This market says no, we're not going to get one, okay? In fact, 0.2 of the market is saying maybe we get a rate hike. So that's interesting as well. If we come back to the liquidation chart, there's a few key areas of interest. The first one, of course, is above us, right? Getting back to that kind of all-time high level around 110, 111. There's going to be billions of dollars of liquidity sitting there, which market makers will be tempted to grab, right? Going to new all-time highs, people always like to short from those areas from the top, and that's going to be a natural place to go grab that liquidity. The question is, however, is which one do we grab first? Normally, market makers will want to grab the stuff to the upside and then pull back to some support, because as you go and grab that liquidity, more liquidity will start to build up for a 100K retest. But also, guys, look at the juicy liquidity here. This pivot point here, around that 93, 94,000 level here on Bitcoin, has a bunch of liquidity. Market makers might start to get tempted by this, so that's something we need to watch for. May want to go grab above, retest down to 100, maybe even pull back a bit more to grab some of that liquidity before a bigger move to the upside. So always watch for these liquidation leverage because that's where the market makers are looking to grab liquidity. Let's get a refresh on the fear and greed index to see if people are feeling fearful here in this market. So as you can see, the market is still greedy, right? 61, we're in greed. This is not the fear and the pullback you would expect from a World War III type scenario. So we can even see the same in the pre-market. If you look at the pre-market here in the US, the Dow Jones showing a little bit of green, S&P showing green, and even look at the headline here, right? Stock futures rebound as oil falls. Investors bet the Israel-Iran conflict will remain limited. So basically what investors are saying at this point is, we think they're going to stop. We think they're going to hit each other a couple of times, and then we think they're going to come and have a negotiation and have a ceasefire. So naturally for investors, this tends to be the opportunity for them to buy the dip. If you follow me on Twitter, you would have seen this update earlier in the day. Quick reminder as we head into the new week, geopolitical tensions always spark fear in the market. You'll see headlines, red candles, and people panicking, but zoom out. Historically, these moments often end up being solid buy the dip opportunities if you're positioned with a clear head. Stay calm, stick to your plan, right? So that's the message from my point of view, that anytime you've seen these issues, whether it's Russia, Ukraine, whether it's any other thing else in the Middle East, whether it's pandemic, whether it's tariff situation, whether it's whatever it is, learn as an investor, particularly if you're young, you're going to get used to this quite quickly. Learn to understand that, oh, these are the fearful days. These are the days where this jumps down to extreme fear or fear those are the days I need to be nibbling because we recover quite quickly. I mean, had you have bought on the panic day, which is very hard to do on a panic day, but if you did, you're buying Bitcoin at 102, right? 102, and you're already back at 106 in a few hours when the daily candle closes. And then today, I mean, you're back up here hitting 107.3. So this is how you can start to trade the market, by just understanding that when people think things are bad, it's never quite as bad as you think. Things recover pretty quickly. Okay, let's also take a look at Ethereum up 2.5%, forming a really, really important level. I mean, I circled this zone a long time ago to highlight to you guys to say, look, not only is this going to be an important level for us to reclaim the EMA ribbon, which Ethereum is trying to do, you've got important horizontal resistance at 27.5. Once we clear that, we need to retest it. Right, so we've got a lot of work to do, got to clear it, retest it, and then we can use this as a base to start getting back above 3,000 and working back towards kind of hoping and dreaming about that 4,000 level again. So a lot of work to do here by Ethereum. And again, Bitcoin dominance, really strong. Really, really strong. I mean, you know, the 1, 2, 3, 4, 5 weeks in a row of green after a little bit of a correction. So if you look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of green, corrected a little bit just to retouch its EMA ribbon for a bit to give you guys a chance, and boom, it goes for another 5 weeks. So, you know, dominance is untouchable here right now. People rather be in Bitcoin than altcoins. But again, that's the time for you to get positioned in your altcoins. You need to learn to buy when no one's interested. That's when you're going to get the right price. When everybody's interested, that's when you're getting out. That's when you're trimming. That's when you're taking profits. That's where you're learning to jump out of the market. Few other important updates. Michael Saylor continues to acquire. That guy has just gone ahead and bought another 10,000 Bitcoin for $1 billion. He now holds close to 600,000 Bitcoins. Other people are following suit. I mean, Meta Planet here, they're sitting at 10,000 Bitcoin, but they've shared their path to getting to 210,000 and tried to become the strong second after Michael Saylor. So we're starting to see a lot of these kind of, you know, companies / vehicles try to buy Bitcoin with leverage as an arbitrage opportunity. But of course, Michael Saylor setting the example, and people are doing the same in Ethereum. Don't be surprised to see people doing the same in Solana. I've shared my views on this in the past. I think it's a double-edged sword. Short term, I think it pumps your bags. Long term, it's a problem. If you invite this type of leverage and greed into the market, fine, go and do that. Pump your bag. Just do not cry. Don't cry to me. Don't cry to me. I've warned you. Don't cry to me when the music stops, okay? Just a big, big warning for you guys. So we'll refresh the bubbles. Again, some green. I mean, Hypecoin has always kind of given us some positivity. Casper is up 10% incidentally. Solana up 4% today. Solana up 5.6%. Sonic up 4%. A decent day saying, look, we don't think things are as bad as we think. But again, this market is moving fast and things can change very, very quickly. What am I doing in this market? Guys, I'm being patient, complete honesty. Look, on the weekly chart, we're extended, right? A pullback here is 96, which ties in with some of that liquidation I saw around 93, 94. So, you know, the bear inside me, not the bear, but the realistic person inside me says, just come pull back here, get a higher low, that's one low, get a higher low here, and start working your way back up to create a higher high, right? But, you know, naturally, that pullback is then accepted. If you come back to the daily chart, however, you're like, oh, that looks good, right? We're bouncing. This is good. But it could just be a little fake out, right? It could be a little fake out before we then continue down this pattern. So don't get fooled by something like this. Equally, don't even get fooled by just something that just wants to come straight back down, go back up, down, and then we lose this pattern, right? Because if we do break out of this pattern and start heading down to these levels, guess what? On the weekly chart, that gives us the pullback, which is what we're talking about. And I think longer term, that pullback is healthy. Look, I know you guys won't like it. I know it's not going to pump your bags overnight, but the reality is that kind of a pullback to come back and retest our EMA ribbon is actually really, really healthy. If we can come back down here, 92, 93, these kind of levels, create that higher low and use that as the base from which to go attack 115, 120, that's going to be good. Because if we just run from here, imagine we just explode from here, we're overextended, right? We've not, since that big move all the way from 74,000, we've not cooled off, right? 74,000, boom, off we go, all the way to highs of 112. and we've never fully corrected. We're just correcting a little bit here in the last month. That's not a full correction into the EMA ribbon, okay? So I'm happy, like how we did here, for us to have a full correction, because look at that move, guys. This move took us from 49,000 all the way up to a candle top of 109. Big move, a double in Bitcoin's price, but you got a proper pullback, you know, into your EMA ribbon. This is a nice opportunity to buy the dip, just like this was here, and then you rip again. Again, pull back, nice opportunity to buy the dip, and then let's see us rip there. So there you have it, guys. Hopefully this could be a start for some green in the markets. I'm prepared for either situation. Pullback, I'm going to buy the dip when we get closer to that weekly EMA ribbon. If we want to move from here, let it move. I'm not going to FOMO. I'm not going to chase it. Let it move. Let's see some green. Fine, no problem. But all I need to do is either buy the dip if we pull back or sit patiently if there is nothing else to do. That's my investment portfolio. For the day-to-day trading, you'll need to jump into Telegram, where I'm going to show you exactly how I'm delivering spot returns without any leverage, without any margin, and I'm doing it repeatedly, and I have been for over a year, sharing the result of every single trade with you in the Telegram community. Click the link in the description, get involved, and I'll see you in the next one.